Precious Metal Fair, Edelmetallmesse in Munich, ladies and gentlemen, 2016, and with me here is one, I would say, of the real top experts of the uranium market, and it's Scott Melby, the Executive Vice President of Uranium Energy Corporation, UEC, you know, the great company by Amir Adnani, and yeah, we want to talk about uranium markets and, of course, what's going on maybe then in the future with the Hobson plant and some future production from there for UEC. Scott, welcome, and a really pleasure and honor to have you here.
Thank you, Jochen. It's a real pleasure to be here in Munich, and thank you very much for giving me this opportunity to talk about uranium.
Absolutely.
And, you mentioned Amir Adnani, and really the philosophy of Amir is to take distressed assets in depressed markets and prepare them and package them for investors to really realize on price recovery. He's done that with Brazil Resources and is doing that with UEC. What we have in UEC in a nutshell is a Texas-based uranium company with a fully licensed 2 million pound a year plant and 18.5 million pounds of reserves within 50 to 100 miles of that Hobson plant.
But which is not yet producing because prices are too low, right?
Exactly. We're a bit unique in the uranium space in that we are an unhedged producer. So that means in periods of price weakness, we have to have the discipline to shut in our operations and conserve the resource. The asset is worth more in the ground than it is being sold into a weak market. So we got into production in 2011. We proved up the asset, the production methods and the production cost very low, about $21.77 a pound cash cost. That's first or second quartile.
Almost $22.
Correct.
Oh wow. Okay.
But we quickly ramped back down in 2013, realizing that this bear market from Fukushima was going to last a little bit longer than most had expected. But that doesn't mean that we're not increasing shareholder value. We're continuing to permit, license assets in Texas, continuing to do some drilling, adding to the resource base, and also moving forward slowly, but moving forward in Paraguay, where we believe we have an asset equal to Texas, if not bigger, for future development.
Fantastic. So that means we need higher uranium prices that you can go back into production. I would call it, it's an ISR production, yeah, so it's not a lot of disturbance. As you are one of the top experts in uranium space, you work with Cameco, Rosatom, Casatom, and you are with the Uranium Participation Fund. You told me like 27 years you are now in uranium space, right?
33, yeah.
33, sorry. And what can you tell us about demand, supply, uranium markets today, and what is your expectation for 2017?
Sure, and you know, having been in the industry since 1984, I've seen my share of commodity cycles in uranium, and certainly this one that we're going through post-Fukushima has been a very difficult one. It's been a point where we've gone from $70 a pound prior to Fukushima, you know, 5 years ago, to today under $20 a pound. There's some year-end selling right now that is kind of pushed the price even below 20.
Yeah, but from where comes this price pressure?
Yeah.
I don't get it.
It's I think the reason for the year-end drop is very specific, that utilities in the United States had expected to be more active in procurement this year, but they've just pushed for budgetary reasons into 2017, and so you have some year-end selling by producers with inventory and traders with long positions. Now, the good news is that any commodity is not going to experience a sustained recovery until you have that final capitulation and that blowout of the overhanging inventory. And I believe we're at that point now. And I think one good indicator of that is if you follow UPC, which is a pure physical fund. It trades either at a premium or a discount to its net asset value. Yeah. For 2 years, over 2 years, it's been trading at a discount, which is a measure of pessimism in the investment community. Within the last 5 weeks, UPC has gone to a premium as much as 12% yesterday to its NAV, and that is a good indicator that investment community believes that uranium is certainly going through that final capitulation and is setting up for a recovery. So what's going to be the catalyst going forward? We have a very high amount of uncommitted utility demand in the 2019-2020 period onward. And to put that into perspective, the level of forward coverage by the nuclear power plants around the world today is at a historic low point. it was at a high point of coverage after the 2007 price rise, when everyone panicked, signed 8 to 10 year forward contracts. Well, now in 2016, 17, 18, those contracts are falling off, but they're not feeling compelled to sign contracts because price is low. It's exactly the wrong approach, but this is what they're doing.
It means that everybody wants to walk through the same door then, right?
Yes, and that's what happens. The utilities in 2007, 8, 9 signed record volumes of long-term contracting.
How long are the contracts normally?
Normally they're 5 to 10 years.
Oh, really? That long?
Right now,
Wow.
the utilities, because prices are low, are really staying in the medium-term market, which is 1 to 4 years. So they're not concerned about the future. But I shouldn't put all in the same camp. The Chinese, the French, the Koreans, they are going, I mean, they're thinking of nuclear programs for the next 60 years. They're out contracting, they're out taking equity positions in uranium mines and buying inventory. The Chinese, in the last 5 or 6 years, have acquired a 270 million pound inventory. And that's imports from Port of Shanghai and across the Kazakh border at Alashenko. And what they've done is they've taken advantage of this weak market and bought uranium, which is an undervalued asset. It will go up in value, and they'll very quickly use that inventory up.
Yeah.
They're the fastest growing market in the world today. China will exceed the United States in installed capacity of around 100 gigawatts within 10 years.
I think we have every second or third month, meaning by quarter, we have one nuclear power plant going online, right?
Yeah, absolutely.
How much pounds do we need to start a nuclear power plant? Is it like 5 million? That's what I heard.
Yeah,
is that correct?
There is a front-end loading of nuclear power plants called the initial core, which is 2 to 3 times the size of the reloads that are going in on an 18-month or 24-month basis. So when people look at that Chinese inventory, they're going to grow into that quite quickly, and frankly, they're not just sitting on that, they're adding to it, and not just adding physical inventory.
Yeah.
Again, as I mentioned, they're acquiring assets in Canada, in Africa, and around the world, and that just takes that much uranium out of circulation for Western utilities. So the growth picture, we have about 59 reactors under construction around the world today, another 168 being planned and proposed, and 447 reactors operating 24/7. So the demand picture for uranium is about 2.5% annualized growth year over year for the foreseeable future. So we're in a growth industry, yet the commodity is severely depressed, which as investors, this is an ideal situation.
Absolutely.
Where what we're doing at UEC is we're positioning our company to allow investors to really realize the full upside on that uranium recovery.
Yeah.
And in terms of timing, you see the investor sentiment is changing in terms of the big hedge funds and others that are looking to get in on a physical basis. So we feel that UEC is an excellent vehicle to make money in uranium, like many have made money in gold.
That's right. Last question, because I think that's the key point to UEC finally. What price of uranium you would choose or take where you say, okay, now let's go back into production, and how fast can you turn the key that you can produce, meaning making money? Yeah,
and we've been quite upfront that with our cost structure being very low, first or second quartile globally, we would see a sustained market in the $40 range as an area where we would go back into production and make very decent profits. It's important because most new uranium production, be it open pit or underground, is going to require billion-dollar investments, 7 to 10 year lead times, and is not going to come on before we see $60, $70 a pound. So the low-cost ISR producers like UEC really have a sweet spot in the market recovery, in that they can come on much quicker. In our case, 3 months at Palangana, and we're producing in Yellowcake from Hobson on that short a notice. We have our other projects, Goliad and Hobson, I mean a total of 18.5 million pounds in the Hobson vicinity. And we've shown that we can build a satellite with $10 million capital investment and 6-month lead time. So that's unmatched in the industry, and is a reason why people turn to UEC as one of the preferred pure plays.
Yeah. So it looks like you are the perfect long option without a banking risk, without a counterpart risk, if you are long on uranium, right?
Yeah, absolutely. And we're in a jurisdiction that's just not to pick on anyone, but the fourth largest producer in the world is Niger.
Yeah.
And with all the issues with Al Qaeda and ISIS and Boko Haram, in Texas we don't have such problems.
No, definitely
it's very
not.
stable. We have infrastructure, and I think that gives investors a great deal of comfort.
Perfect. Thank you. You already got some applause for the company.
Thank you.
Scott, thank you very much for the interview. Very informative. I really enjoyed it. Thank you very much.
Thank you.
Ladies and gentlemen, it was Scott Melby. It was a bit longer than usual, but it's so interesting to listen to him. He's one of the top experts for uranium. He's the executive vice president of UEC. And you heard it. If it's around at $40, they turn the key, go into production again. This could be achieved like in 2-3 months easily then when the price for uranium is there. And the demand side is growing by 2.5% per annum, but the supply side is definitely not. We have no large projects which are coming on stream, and demand is growing, and that's exactly what you want to have. Check out the company. Thanks for watching us. Bye-bye from Munich.